Hi everyone, Emily from Focal Point Bookkeepers here. So in this video, we put together a wrap-up file here, bookkeeping wrap-up for the year for 2025, which includes a comprehensive checklist, which we'll go through in a little bit more detail. Includes all the deductions you should make sure you've incorporated in your books, a home office calculator for those who are using a home office, and then a little compliance if you've paid anyone that may need a 1099 this year. So we'll get started in the checklist. Most of this is pretty straightforward, so I'm going to kind of just go through the items that are a bit more important or that tend to have some complications and questions as you go through. So first off, make sure you've cleared all of your bank feeds inside of QuickBooks. Anything that's left in a bank feed does not show up in a report, so it has to be processed in order to be fully recorded. Next, make sure you've reconciled all of your bank, credit card, and loan accounts. That process in QuickBooks I find is pretty streamlined, unless there have been some like duplicates or missing transactions along the way. And I'll go through some troubleshooting tips if that might be the case. But make sure that that is done before proceeding, because there will be some inaccuracies if those accounts aren't reconciled prior to reviewing your reports. So we'll start with the profit and loss. I recommend running this by month. So if you hop over into QuickBooks and go to reports, standard reports, you'll choose your profit and loss here. And then you're going to use 2025. This is just dummy data, so then I'm going to go to, then I'm going to go to display, transaction date, and then by month. So this will, if you have data in there by month, give you a column for every month. And that just makes it so much easier to analyze the trends. If you're looking, across an account and there's a really big spike in 1 month, that gives you an indication that, it might be something you want to click into, see the accounts that are transactions that are in there, reclassify them as needed, or just review. It might not be inaccurate, but always good to review those accounts that are kind of outside of the regular monthly trend. And so when you are doing that, you can click into, so if I have multiple months here, I can just click into that month. That'll give me all the transactions inside of that particular month, and then I can click into those and reclassify as needed. If you click into the total, that'll give you everything within the year if you've run the report for the year. So that's that, I think, on reviewing the P&L and reclassifying anything that appears to be in an incorrect category. Okay, next is the balance sheet. So the balance sheet, typically the profit and loss statement is much more familiar to most, and it's much more digestible and comfortable report. The balance sheet is a less run report, but it's honestly probably the most important to review to make sure your records are accurate. If the balance sheet is accurate, it's a really good indication that your books are clean and up to date. So you'll go to the same report, standard reports, run your balance sheet. Right now we're in the middle of December, so typically you want to run this for the prior month, or this year to last month. So that will give you all of the transactions. If you were to click into this, it'll give you all the transactions for this date range so that you can review in total. So first thing you want to make sure of is that the balance here that you're seeing in QuickBooks matches exactly to your bank statement. For checking and savings accounts, typically the statement end date is the last day of the month. So if you're running this through the last day of the month, those should match. If they don't, it means there's something in that bank register that doesn't appear in your bank statement, or there's something duplicated inside of your QuickBooks bank register that isn't on your bank statement. And I'll go through a little bit of troubleshooting on how to dig into that. But this is the first check, is to make sure that the bank account balances here match exactly to your bank statement. If not, there is something that is wrong. Credit card, so same with credit cards and loans. However, the only difference there is typically the close date for credit cards and loans happens in the middle of the month. It doesn't happen on the last day of the month, like checking and bank accounts. So you can run this to whatever day. So say your bank credit card account closes on the 12th. Then if you were to run this on the 12th, that amount there should match that statement ending date. And again, make sure that you've processed everything through your bank feeds, or otherwise they're not recorded here. Okay, so that's pretty much the most of the work that needs to be done on the balance sheet. And again, balance sheet is like the pinnacle of success for clean bookkeeping. It's much easier to tell if something is off, if the balance sheet accounts aren't correct, versus the P&L. It's much harder to understand if something is off on the P&L versus the balance sheet, because you are actually reconciling to bank statements to make sure everything was recorded properly. Number 5 on here is just to make sure there is no patient information included in QuickBooks, since it's not HIPAA compliant software. If you're using a EHR system, typically this isn't an issue because they're coming over in lump sums. But if you do have any like one-off direct transfers, just make sure to check in the descriptions and remove any of those names and use an identifier that is anonymous. Number 6 is to go through any deductible expenses that may have been paid through personal accounts. So using this deduction checklist, if you have your business bank account connected to QuickBooks, most likely most of these things are coming in automatically. However, there are going to be some things like a home office deduction, mileage and travel, perhaps a cell phone, that would need to be added to make sure that you're including those deductions. And I can show you here a quick way to do that, to get them included for the year. To do that, you're going to use a journal entry, and going back into QuickBooks, you'll use this plus create and create a journal entry. So you'll select the account, the expense account here, and debit the amounts that you perhaps paid for with personal accounts that are deductible to your business, and then you'll credit the owner contributions. So this allows you to record those in your books without messing up your bank balances and your reconciliation. So that might be one thing where throughout the year, if you've added an expense manually in QuickBooks and you've used the payment account as your business bank account, that can throw off the reconciliation. And so here is a method to add it without doing that, because you're actually crediting this to owner contributions, which is just basically saying you, as the owner, contributed these amount of funds to your business by way of like not paying for this with a business account. You paid for it with personal funds. So then we can save this. And then also make sure to add any receipts to that journal entry. There's a place you can upload files to confirm that those are indeed expenses that you incurred that are deductible to your business. If you have a home office deduction, you can follow that same methodology by creating a journal entry and using the last day of the year to record that as well. So now going into some troubleshooting, if your ending balances don't match. So typically this is also, you would have run into issues while you're reconciling. And so one way to review all the transactions in a particular account is to view the register. So here I'm in the chart of accounts, accounting chart of accounts, view register. There isn't going to be any data in here because this is just a sample account, but what you'll do, so you'll see all of your transactions, everything that you push through the bank feed in this register here, and you'll see like a check mark to show that it was processed, cleared through the bank feed. This will also say, we'll have an R if it's been reconciled. And so what you'll do is reconcile status. You want to choose no status and apply. So this will show you everything that's been added to that bank feed, that or that bank register that wasn't reconciled to a statement, so that you can then sift through those things. A lot of times, if you've added something manually and you didn't match it to the transaction that came into the bank feed, there'll be a duplicate there. Or if you have like a transaction that's broken out into like itemized, but it came through as a lump sum in your bank feed, then those would need to be matched. Otherwise, they create duplicates as well. So this will give you at least a gauge of what's out there that wasn't matched to a statement throughout the year. And most likely these would have come up as well in your reconciliation process. In that reconciliation screen, they'll be left over going through the reconciliation process. So this should help, and then you can click into any of these. So let me pull up an expense screen just because I don't have any real expenses in there. So sometimes also, if you've added an account manually and this payment account isn't the correct one, that will throw off your reconciliation as well. So this has to be selected to the correct bank account that expense was actually paid from. And if you've added expenses throughout the year that were paid from a personal account, but your business bank account is selected here, then that's going to throw off the reconciliation because it didn't actually go through your business bank account, it went through a personal account. And you aren't able to select the owner contribution here. So that's why I recommend just doing the journal entry. It just makes it a lot easier without having to go through this process. And then also looking at not reconciled status can bring some up if they have been pushed over and cleared. And then one other thing that I recommend doing is clearing that filter. And then if you're looking at this by date, you can compare that to your bank statements and see at which point the balance diverges from the bank statement here in QuickBooks, and that can kind of just help you dwindle down to the point at which is causing this to be off. So that should help with some reconciliation discrepancies that you may have. Business loans. So if you do have legitimate business loans, typically student loans are not deductible, but the interest on business loans is deductible. So you do want to make sure that that is added to the books. You can add a loan to a QuickBooks Bank feed. In some cases, it depends on the bank, so that the transactions are automatically feeding in. So if that's possible based on your bank, I recommend that you do that, and then you would reconcile that loan account just like a bank account in QuickBooks. If that's not the case, this one is a little bit trickier to do. So if you find yourself in a situation where your loan account isn't reconciling, then reach out and we can help you with that. And then lastly, here's just some general best practices is to always then rerun your reports after making an adjustments to confirm and validate that the things that you did were accurate. Review by month so that you can see the trends. Just much easier to see something that sticks out monthly versus looking at it in the yearly total. Use the reports to validate the accuracy and just make sure that you've reconciled everything with zero discrepancies. So that pretty much takes us through the checklist, or the year-end books review checklist. The deduction checklist, this is pretty straightforward. Like I said, most of these things should be feeding into your account through your business account. So just read through that and double check that you haven't missed anything, and add things that might have been paid through a personal account. Home office deduction calculator. So there's a couple of methods here, and there's a more detailed video, so that I don't make this one any longer than it already is. So take a look at that if that applies to you. And then the 1099 decision tree, this is ultimately just to help you kind of go through and come up with a list of people who may need a 1099 from you. The one mistake I see that's made here often is that people assume if it's a business that it doesn't need a 1099, which isn't always the case. If you've paid someone who has an LLC, but they're the sole owner of that business and they're not incorporated, like an S Corp or a C Corp, then you would need to 1099 them as well, and you would find that information on a W-9. And then there's some other exceptions and identifiers here to go through to just come up with a list of businesses and individuals that may need a 1099 from you. Always at the end of the day, the IRS is the official agency with the official instructions on that. So we've linked those here so that you can reference that as well. As this is just a tool to help you more easily identify if you need to 1099 someone. Okay, so I think that should do it. I hope this was helpful. If you run into any issues along the way, if you want a second set of eyes on your books this year, please don't hesitate to reach out, and I hope you have a wonderful day. Thanks.